Good afternoon, everyone, and thank you for being here today. My name is Leslie Lamb. I'm the Chief Marketing Officer of CoinFLEX, which is a crypto derivatives exchange and yield platform for passive capital investors and active traders. Today, I am joined by an extremely talented panel, both in person here and also virtually as well, so we're going to try to make this work. So why don't we kick off this discussion with a few speaker introductions. Maybe we have Bill give his introduction first, and then we'll go to you, Joseph. And then going on. So great.
Yeah, so nice to meet you guys. I'm Bill. Unfortunately, I just got COVID the day before the forum. So hopefully, I can recover soon. But it's such a pleasure to meet with you guys. I'm looking after the global M&A and the investments for Binance.com, and currently, we are managing both the majority investments and also the crypto venture with the external LPs. It's such a very phenomenal to see the industry begin to adopt the crypto, and we have invested more than roughly 150 portfolios. Including from the infrastructure to the application. And a little bit background about myself. Prior to Binance, which I joined last year, I was with the typical Web2 platform, JD.com, looking after the strategy and investments. So a pleasure to meet you guys. Yeah, that's it from my side.
Joseph.
Hello, everyone. Thanks for having me. My name is Josef Holm. I'm the founder at Draper, Goren, Holm. We are a California-based early-stage venture firm. We have a venture studio and the fund. We invest in pre-seed, seed, Series A, and I've just recently moved to Dubai, so I'm new to town. I'm heading our expansion here in the region, and we're setting up a much bigger fund now here in the UAE that will will invest in companies from Series B and onward. And I'm happy to be here. I'm looking forward to the conversation.
Thank you for joining us. Shira?
Yes, hello. My name's Shira Frank, and I'm here with two roles. I work at the MIT Digital Currency Initiative, where we study and research decentralized technology as well as centralized digital currencies. I'm also here as the founder of Maiden Labs, which is the first neutral user research lab specifically for digital currency, trying to understand what are the actual widespread mainstream needs that this technology might solve. So that probably will speak to a lot of what we're going to get to today around institutionalized adoption.
Yes, for sure. So if you've been following the cryptocurrency space, you'll know that the theme that we're exploring today has been on conference agendas as early as 2014. And fast forward nearly 6 years now, even more, 8 years, I'm excited to say that institutional investors are actively participating in crypto, and the momentum is only growing stronger by the year. According to research firm Masari in 2021, institutional investors traded $1.14 trillion worth of crypto on Coinbase alone, which is 10 times the amount in 2020. And a new survey from London-based Nickel Digital Asset Management found that institutional investors and wealth managers have dramatically increased their allocation to cryptocurrencies over the past 12 months. And institutional adoption of crypto is being driven by a confluence of factors, which include strong market performance, a lot more funding being sent into the space, as well as more regulatory clarity as well. And one thing's for sure, crypto is capturing more mind share from institutional investors around the world. And the big question is, will cryptocurrencies, rather than just stablecoins, become widely adopted as payment mechanisms and settlement currencies, replacing fiat currencies altogether? So today we'll explore the prospect of this future. Let's dive in. So Bill, I'll hand it over to you first. Binance Labs makes targeted investments into crypto infrastructure and service providers across many different verticals. And because of this, it's fair to say that you are often ahead of the curve when it comes to understanding what is being built for the crypto space. How would you characterize the institutionalization of crypto?
Yeah, thank you, Leslie. I think when we talk about the institution, we need to first of all categorize the institution into several category. So one thing would be the global asset allocator, like sovereign wealth fund and pension, etc. And another category would be the financial institution, let's say the Visa, Mastercard, and the bank, etc. Yeah, so I think there are two type of adoption we have witnessed. From the global asset allocator perspective, we do see yield endowment or other universal endowment or even sovereign wealth fund. They began to take one step forward. Firstly, they began to invest in the equity structure of some certain exchange. And then they move forward, began to invest as a limited partner to the crypto GP as well. And on top of that, some aggressive, institutions, they even began to allocate their, asset class, let's say 1%, start from 1% to 5% into the crypto assets directly. So that's the phenomenon we have witnessed. And another thing would be, the general financial institution. I think, since 2020, Visa, Mastercard, JP Morgan, etc., the clearance and settlement and also the financial institution began to accept and embrace this kind of innovation and began to build up the use case. Regarding the global massive adoption, I would say still we only have 5% of the retail user are using the crypto. In that case, we still have 95% of the global population, they don't have the accessibility into the crypto. So I do see this is one of the most mega trend in past in next decade, and I do see there will be a lot of more capital allocation and more collaboration with the crypto in next decade.
Great. Joseph, as a venture fund, you similarly hold a macro view of the ecosystem. Can you talk about what tools are being built now to basically support and drive the tailwinds for greater institutionalization of crypto?
Well, I think the two drivers of innovation in finance on the blockchain is, on the one hand, you have the fully regulated space, and then on the other hand, you have on the other side, you have the DeFi space that's totally unregulated, and arguably the more exciting stuff is going on the DeFi side of things. There's more innovation, it's faster paced, and this is obviously, the truth will be somewhere in the middle when, DeFi protocols adopt proper KYC and AML and become more institutional accessible. It's not like these institutions don't want to participate in DeFi, but they mostly can't, right? It's a big gray area where a lot of money laundering is going on and unregulated activities. But I think that over time, I'm not one of these hardcore crypto guys who thinks that we will build the new banks and we will replace the banks. I think the banks are here to stay, and the future is really to find ways of institutionals employing new technology in a compliant way and providing their clients with more up-to-date and more better products to keep it simple, because they're not doing this because they really want to. They're doing this because their clients keep asking them for years now, and slowly we've reached that critical mass where they know they're losing out on a lot of money by not playing in this field.
Right. So they have to take a stance.
They have to, yeah, absolutely. Their hand is being forced.
Right. So Shira, as you mentioned a little bit earlier, aside from your role as being a strategic advisor to the MIT Digital Currency Initiative, you run Maiden Labs, which focuses on researching public adoption and widespread use case of crypto. What are your biggest takeaways from your current research so far?
Yeah, absolutely. So I will say a little bit about MIT, though, because I think it connects, which is that at MIT, we've realized we started out in 2015. We took out basically the Bitcoin Foundation fell apart. I'm not sure how many of you were around then, but a few of the core developers of this technology had nowhere to go, and MIT brought them in. And so really, the whole time at MIT, we've been looking at what are the foundational layers that need to be matured at the technology layer for this kind of technology to actually be a public good and to have the biggest, most powerful impact on our financial systems. So you mentioned that you don't think it's going to replace fiat. I would say we don't either. We really believe this is not it's funny, we talk about adoption, we keep using this word. Sometimes I just hate this word because it keeps coming up and I feel like we never pause to say, what do we mean? There's a lot of ways to look at it. I think for a lot of us at MIT, we're asking ourselves, and at Maiden, is this a new tool in the toolbox? We just want to get actors to adopt? Or are we actually talking about a whole new toolbox? A response to my thought.
We'll take a bit second.
If only I could speak their language.
I think we can just
keep
continue.
Going? Sorry,
Yeah,
I
no
didn't
worries.
know if you could all hear me. Okay, great. So when we've been doing user research, to your direct question, so we've been doing technology research primarily, and that's when I came to MIT, that was all we were doing. Research into the security of these networks, into the scalability of them from a technology perspective, into their privacy. The pillar that was missing was people, right? Like, how will people interact with them, and why will people interact with them? And so that's why I founded Maiden Labs. I was very confused by how much weight was in this market financially and also politically, and yet how nobody, from the top government officials I was talking to the most exciting startup founders, really had any evidence or data on how or where this technology had a mainstream billion user use case. They had anecdotes like, oh, of course, people will send remittances, but there was no evidence. So I think, to share just two things, we're just starting to do widespread research. First, it's taken time to get the funding. It's odd, but even the Coinbases and Binances of the world are not funding open source widespread user research that can be available. So we just got started with a US fund study, and the biggest takeaways from that were that uncertainty in transactions is one of the biggest pain points for people, at least in the US payment system. So this could mean if you're sending remittance payments, not knowing, is it 2 days, is it 2 weeks? Where is the transaction en route? A sense of not understanding if it will go through. Now, these are things you might say is obvious, but actually technologists are not, and product companies have not seemed to be designing to optimize for removing uncertainty. So this is really interesting. It's not just fees that are a problem, it's actually a sense of how, can I be clear and certain and safe with where my money's at any given time? This is something cryptocurrency could solve. I think we could make a lot of money and also do a lot of good actually solving for those pain points.
Right. But we can't talk about adoption without talking about use cases as well. So Bill, I'll head it over to you. What are the primary use cases of cryptocurrency for institutions today?
Yeah, I think for institution, from my point of view, first of all, in past, I think 5 years, the global asset allocator, they began to their use cases, began to invest in the crypto VC, began to invest in the crypto protocol, and that will be, one of the very first use case from the global institution, because I think in past 5 years, crypto began to sort of prove several legit use case. The first one would be, from my point of view, would be BTC as a digital gold. And when this thesis got sort of consensus, and the global investors, some of the pioneers, they began to allocate in this one. And another one, Ethereum is kind of a decentralized AWS plus a database, etc. And in that case, quite a few crypto VC began to invest in the application on top of that. Yeah, so I think that's the first use case I would mention. And the second use case I would mention would be, the financial service institution, like the bank and the clearance, settlement, custody, etc. And as long as they accept crypto as a new commodity or new, payment alternative, and all the counterparties, they began to get involved in the collaboration. There are crypto custody, there are crypto, clearance, there are crypto, anti-money laundering service, etc. And those build up another use case. Yeah, but in the end, I think all the use cases come from the retail user, because if the crypto cannot build up the retail users use case, and that should be a sort of a bubble or just a story in the end. So I think for the I just want to mention also about the use case on the retail user side. So on the retail user side, if we take analogy of the Web 1 in 1999. The very first industry reformed by the first generation internet is a newspaper. newspaper industry reformed by Yahoo, and the yellow page industry reformed by Google, and the bookstore industry reformed by Amazon back to 1999. And so far, I think it's also another, sort of a 1999 of the third generation Web3, which is blockchain. And from the retail side, like the payment and also, the GameFi, entertainment, enterprise service, those are the incumbent, the major industry reshaped by the blockchain, and also, they attract quite a few retail users into this market. Yeah.
I think when it comes to adoption, we'll reach real mass adoption once we stop talking about this or that being a blockchain product or a blockchain app. I always compare it to Facebook. Like, who in the room knows which database Facebook actually uses for their services? Nobody does. It doesn't matter. So which blockchain is powering certain apps? Nobody really cares. I think where it becomes really interesting for banks in particular is to finally be able to offer high-yield savings accounts again. There is a company that we just invested in, for example. They are building on a fully compliant, regulated, high-yield savings app. It's kind of like a one-trick pony. It's very simple. You download it, you connect your bank account, you upload euros or dollars, you earn 10%, you can take the money out at any time. In the background, there's obviously a lot of tech going on, and AI-powered API layer that invests that money in different DeFi protocols, but all in a regulated fashion. And those are the use cases that really excite me, because I can see that being used by 150 million people in just in Europe, because it makes sense. Where are you going to take your money to the bank, get 0%? Or are you going to download an app and get 10% and have the same regulated protections that you have when you go to your local bank? So I think that's what it's really about when it comes to mass adoption. Making products that work better using blockchain than without.
Can I just add on? I love this point. Couldn't agree more. I think this binary also of decentralized versus centralized is really ridiculous, especially when it comes to history of technology evolution. A lot of us at MIT really are hardcore, Bitcoin developers when we employ the lead maintainer, and yet we've learned that centralized central bank digital currency could actually be quite a useful on-ramp, perhaps. Where else are we going to figure out how to do public-private key pairing precisely for a mainstream billion-plus user? Maybe it'll come from the crypto space. It might not. It might come from central governments needing to onboard billions of people into a payment system. And so recognizing that actually it is about understanding that we're re-architecting the core pieces of the financial system and picking them apart and redesigning them and putting them back together. And that's what's exciting, not whether it's blockchain or whether it's decentralized or this kind of,
Exactly.
So the categories.
Yeah, well, let's double click on that. When we're talking about onboarding, not just the next couple thousands or millions of users, but the next billion, right, users into crypto. What we really need to think about, I think, is the emerging Web3, infrastructure. And so part of the research that you do really covers a number of different topics when it comes to infrastructure, that being the security, the stability, the scalability of various protocols that are being built, right? Can you talk to us a little bit about that for our audience and just cover the base there
Basics,
for us?
Yes,
yeah.
And this is such a rich topic, so I'll just focus on security. I think especially if we're talking about investing and institutional adoption. So like I mentioned, we employ the lead maintainer of Bitcoin. So this means that and a couple of other core maintainers, we've been studying and getting PhDs in decentralized network security for years and years and years. And we've noticed some concerning trends. First of all, it's great and exciting, and it must be that this is open source software. But somehow institutionalized investors who are pouring in don't understand what open source software means when it comes to network security risks. And there's literally, last year, we got the first meaningful and really small, $1 million over 4 years is nothing, investments from Gemini and Coinbase and Chaincode. We're getting these tiny, these are these companies' first time ever funding open source Bitcoin security development. So if you think about this network, an open source decentralized network that is powering this $1 trillion+ industry, and if Bitcoin were to fall in some way or be hacked in some way, it wouldn't just impact Bitcoin, right? This would impact the whole industry. So the things we've been focused on are fourfold. One, hiring people long-term to work on Bitcoin security projects. A lot of exchanges are doing like little grants, like, oh, I'll fund a Bitcoin developer, isn't that nice? It's great, but that doesn't get you 5-year-long projects in like maturing the ecosystem and catching potentially, hazardous risks. The second one is just very simple, but there's tons of bugs. There's bugs everywhere in the code. There's bugs in code dependencies. Who's catching them? Of course, open source developers, some of them want to and do, but this isn't a job, right? This isn't necessarily where they have a whole strategic 5-year plan. You do what you want to do. You're an open source developer. You work on the projects that are fun. So we've been funding developers to work on the projects that are really necessary. And the third thing is monitoring. So we think of blockchains as so transparent. Why would we need to monitor? Huge parts of the network have not been monitored. Mining pools, for instance, we learned nobody was watching what was happening within mining pools. These are huge areas where people could be doing all kinds of interesting things that are not safe. So we set up a global kind of mining pool network spy, basically, to notice, are things actually happening at the right time? Is that block being mined at the right time? Is there anything funky? And then the last is to improve automation. There's maybe 6 people in the world who understand certain things about how this network runs when it comes to really scary security risks. What if they died? What if they were kidnapped? What if whatever? How do we automate? How do we transfer that knowledge? These are things that are not really being, I think, given the attention they deserve and the funding they deserve by the whole ecosystem. So that's something we're hoping to change.
That's a very interesting point, right? Think of which CTO in their right mind would say, oh, we're going to build this critical piece of infrastructure now on some open source software where if something goes wrong, I can post in a Reddit forum to ask for help.
Yeah.
Right? That's not the right service level agreement if you're running billions of dollars through a network. So I think this is where blockchains like Casper come in, where you can actually get a service agreement with the Casper Labs organization, and then they help onboard institutions and big enterprise, because otherwise open source always sounds so nice until you run into a problem and you're relying on someone else helping you. So
I wasn't to degrade open source, because actually it's quite secure. It has not been broken yet, right? But we just need to invest in it is the point. But yes, absolutely. I think
a lot of small things are broken. You get no help. That's frustrating. You know how that goes.
Yeah.
So for all the
if I may, I want to know something about the open source as well. I think the IT industry has more than 5 decades history, and open source is not a jargon for the Web3. Even for the traditional on-premise IT industry, we have already got Red Hat with open source version and also the commercial version. Yes, I think open source to some extent it will provide the resilience of this kind of a support and the involvement from the global developers. But for some certain enterprise who want to use this kind of open source, definitely they need to have the dedicated engineers who can work around with those kind of open source. I think it's basically in the end the best option should be in the middle way.
Right. So as we wrap up here, there's so many things we can be chatting about today, but I think top of mind for potentially some of the investors in the room today is, look, if I'm trying to get into this space, I understand infrastructure projects are really what are top of mind for a lot of people because they're easier to understand as businesses. Can you talk a little bit, Josef, about the difference between investing in these infrastructure projects versus getting direct exposure into crypto via tokens, which is another popular way for retail investors?
Well, yeah, I mean, on the highest level of some random token is just it's a really really good way to lose your money. It depends on what kind of investor you are, right? If you're regulated to any degree, then you can't touch those tokens anyway. Some of my friends like to just play degens and invest in those things. Personally, I wouldn't do it from our fund ever. And then as far as investment goes, we as a fund, we take a VC approach. So we invest in equity. We have a 5 to 10 year time horizon with all of our portfolio companies. We don't like to, we wouldn't try to get rich overnight and dump some tokens. It's a very traditional long-term kind of
view for us, and those are the deals that we invest in. There's
nothing worse than someone trying to shill you a token and promising you 1,000x overnight. That's, you know, those conversations never end well. So I think that everybody has to do their own homework and figure out what's their risk tolerance and what do they feel attracted to. But I would just always go with something that's regulated, semi-regulated, but long-term.
Shira, would love your take on what's your outlook for the space, you know, as we go into 2020, the rest of 2022 and into 2023. What are some key topics that institutional investors should be aware of?
Yeah, so again, we definitely work more with governments, but again, that all impacts, right, how the regulatory market will go, whether central bank digital currency becomes a thing will impact, of course, I think the value of these investments. I think for me, what we're really like laser focused on is that we do believe digital currency could radically reconceptualize money and like be a ground up redesign of the plumbing of our financial system, but it deeply depends on the specifics of how the technology is designed. And this is often glossed over. And there's just numerous choices at each stage of protocol layer development. And we're finding this out most of all when we're designing central bank digital currency. So we're in a multi-year collaboration right now with the Federal Reserve Bank of Boston and just signed collaborations with the Bank of England and the Bank of Canada, all to actually say, okay, let's stop theorizing about this idea of digital fiat money and let's actually try to build it. How do you build it? How would it work? What are the choices? What changes about market infrastructure? How do different, it used to be that in our current financial system, certain people authorize, certain people custody. Would that change? How many new roles might there be? So I think really getting into the nitty-gritty of different choices and each of their trade-offs, I hope will be the focus of the coming year, and I hope that investors and private sector will weigh in. We also have collaborations with PayPal and Google that are coming in and trying to say, well, like PayPal, how do we deal with fraud today? How should we deal with fraud? You know, what can we do different with KYC? Like this year, I hope will really be about getting specific and helping policymakers understand their options. Because right now, I think regulation is quite stalled and there's a lot of grit and friction because there's not a lot of clarity. So I hope that's what we spend time on this year.
Great. Bill, did you have anything to add to that?
Yeah, I think, you know, regarding the outlook for the next few years, I would say, you know, the global institution, basically, they have accepted this is one thing that, you know, it's going to enable a lot of industry, you know, payment and game, etc. But also, having said that, you know, it's a brand new asset class. Like, you know, I think our last brand new asset class innovation is back to 1600, which is, you know, actually innovated by the Dutch East India Company. But now, like, you know, we come up also a brand new asset class. So it will create a lot of, you know, regulation issues. And I do feel, you know, in the next few years, the regulators is going to, you know, accept and embrace this industry, but, you know, work along with the industry players to, you know, to perform some, you know, sophisticated plan. And on top of that, the retail users, they're going to, you know, get into the massive adoption, especially with the help of the game and the payment. Yeah. And, you know, as this industry will grow rapidly, and I will assume, you know, the global institutions, their allocation will, you know, start from 1% to 2%, etc. In the end of the day, let's say in the long term, I would say, you know, the global institution allocation into this asset class should be, you know, similar with the other alternative asset class. Let's say, you know, venture capital or technology stock allocation. Yeah, that's my view.
So what we've discussed today is just a very small piece of the institutional investor narrative. Thank you to our panelists today, virtually and in person, and hope you all learned a lot about institutional adoption. Thank you so much.
Thank you, Leslie.
Thank you.
Thank you.